Alright, this video is going to end up being a little longer than my usual videos I've been doing. We're just kind of going to go over some Bitcoin terms or cryptocurrency terms and their definition. So, 51% attack. It could be described using the example of a major shareholder. Once a shareholder owns 51% of shares in a company, they own it. In the Bitcoin community, a 51% attack is a single miner or group having controlling stake of the computing power in a cryptocurrency network. This could enable them to issue transactions that could conflict with someone else's, stop transactions going through, or spend their currency multiple times over and prevent other miners from mining. Okay, an address. A Bitcoin address is the presence that allows you to send and receive transactions as part of the Bitcoin network. It also acts as a public key to your Bitcoins. Altcoin. An altcoin is a name given to a group of alternative cryptocurrencies separate to Bitcoin. Examples of altcoins include Litecoin and Feathercoin, as well as Ethereum and many others. AML, Bitcoin exchanges are subject to anti-money laundering techniques. This ensures that all transactions on the network are being carried out by genuine traders and not those converting illegal funds. ASIC, an application-specific integrated circuit, is designed specifically to process the SHA-256 hashing equation used to mine Bitcoins. ASIC miner, an application-specific integrated circuit miner, is a holy grail of Bitcoin mining, able to calculate the SHA-256 equation far quicker than a CPU or GPU unit. ASIC miners are purpose-built and connect to the network via a wireless link or Ethernet connection. Bitcoin Investment Trust, a sort of Bitcoin syndicate, the Bitcoin Investment Trust invests exclusively in this cryptocurrency and uses secure protocols to keep them safe on behalf of the members. This is one way to invest in Bitcoin without purchasing the hardware required yourself. Bitcoin Price Index. The Bitcoin Price Index devised by CoinDesk shows the average Bitcoin prices across the leading global currency exchanges. The Bitcoin White Paper. The Bible of the Bitcoin Network. This white paper was written by the currency's founder, Satoshi Nakamoto, in 2008. It gives a comprehensive description of the Bitcoin protocol and is a good read for newbies and experienced Bitcoin traders alike. And I would recommend that anyone interested in Bitcoin does go and read the Bitcoin white paper. Towards the end, it does get a little more technical, but it's really an amazing paper to read. And I think anybody, before you do invest anything in Bitcoin, it would be nice for you to read the Bitcoin white paper to kind of understand the idea behind Bitcoin and the purpose of Bitcoin. BitPay is one of the payment channels that processes Bitcoin transactions on behalf of merchants. The Bitcoin White Paper. The origins of Bitcoin can be found in this paper that was posted on Bitcoin.org back in 2008. The paper, titled Bitcoin, a Peer-to-Peer Electronic Cash System, describes a peer-to-peer approach for generating a system of electronic transactions without relying on trust. This was the genesis of the cryptocurrency. And I'll post a link to the Bitcoin white paper in the description of the video. So just look down in the description for that link. Bitstamp. Bitstamp is one of the fastest growing Bitcoin exchange platforms around. Blockchain. This records all the individual Bitcoin blocks that have been mined since the inception of the currency. The chain is designed so that each block contains the DNA of the one preceding it, which secures the chain against fraudulent mining activity. A block reward. A reward is given to each miner who completes a transaction block. It can take the form of coins or transaction fees. Bitcoin currently, this isn't the amount it rewards anymore, but when this was written, Bitcoin currently rewards 25 coins for each completed block. Once the threshold of blocks has been mined, which is currently 210,000 blocks, the reward is halved. BTC is an abbreviated version of Bitcoin similar to USD and GBP in traditional currencies. Buttonwood. Buttonwood was a project designed to create a Bitcoin exchange in New York's Union Square, named after the Buttonwood Agreement, upon which the New York Stock Exchange was formed. It was founded by Bitcoin aficionado Josh Rossi. Client. This is a software program which connects a machine whether a desktop, computer, laptop, or mobile device, to the Bitcoin network. It may also be the home to your Bitcoin wallet. So about the supply or the reward of Bitcoin for each completed block, every 4 years, the amount that is rewarded for the completion of a block is cut in half. So it's not 25 any longer. Confirmation. A confirmation is a successful hashing of a Bitcoin transaction in the block. It can take up to 10 minutes, although larger transactions may require more than one confirmation, as more blocks need to be hashed and added to the blockchain. Once another block is added to the chain, the transaction will be confirmed again. Colored coins. The creation of colored coins is a proposed new feature for Bitcoin, and one which will allow users to define their own attributes of the currency. The idea is that users could mark a Bitcoin as a physical asset, which could then be traded as a token for other property. CPU. This is a central processing unit of a computer, and one that has been used in the past to mine Bitcoin before it was surpassed by ASIC and GPU setups. CPUs are still sometimes used to mine altcoins with less taxing hashing calculations. Coinbase. Coinbase has two distinct meanings for Bitcoin community. A name used for the input of a Bitcoin transaction. Once a Bitcoin has been mined, the reward is recorded as a transaction using this input data. The name of a Bitcoin wallet operator that offers payment processing for merchants and acts as a middleman in Bitcoin exchanges. Coin age. A coin's age can be calculated by multiplying the currency's amount by the period of time it's been owned. Cryptocurrency. A cryptocurrency is one that is deemed legal tender and based on mathematical formulas alone rather than exchange rates. Cryptography. This is the name given to the process of using maths to create the codes used to conceal information. This is the basis of the mathematical equation inherent in Bitcoin mining. DDoS. DDoS stands for Distributed Denial of Service, and is a cyber attack used to drain the resources of a target. This is done by sending small amounts of network traffic to tie up the target's bandwidth, preventing it from providing its services to its clients. Bitcoin exchanges have been subject to sporadic DDoS attacks in the past. Deflation. Deflation is experienced when the price of something decreases over time. This happens when the supply outweighs demand, or where there is only a finite amount of currency around. Difficulty. Each cryptocurrency has a difficulty rating, which highlights how difficult it is to hash a new block. The lower the number, the harder it is to produce a hash value that fits the block. Difficulty is fluid and can change based on the amount of computing power in the network. So if a large number of people left the network, its difficulty would decrease. If a currency grows in popularity, then its difficulty increases as computing power expands. Double spending. This is the immoral act of spending the same Bitcoins twice. The user completes a transaction using their Bitcoins and then makes a second trade from someone else using the same coins. The user must then convince the network that only one transaction has taken place by hashing it in a block. This is why zero confirmation transactions are risky and are not used. Dust transactions. This is a transaction that takes up space in the blockchain but is ultimately worth very little. The developers of Bitcoin are taking steps to minimize the amount of dust transactions that take place by introducing a minimum transaction amount. ECDSA stands for Elliptical Curve Digital Signature Algorithm and is a formula in the Bitcoin protocol used to sign transactions. Escrow. An escrow is a type of online wallet that holds funds securely to protect them during a transaction. It is used where two parties cannot exchange Bitcoins in public and want the added reassurance that their currency cannot be stolen digitally. Exchange. An exchange is where users can come together and swap different cryptocurrencies. A Bitcoin exchange will generally see its users swap Bitcoin for traditional fiat currencies. A faucet. A faucet is a method of mining a predefined number of coins when launching a new cryptocurrency, and then giving these away in order to kickstart the interest in the project. Feathercoin. A popular altcoin based on the script algorithm, and one that is thus suitable for CPU and GPU rigs. Fiat currency. A fiat currency is another name for money used across the world that has value inferred by its owner. This is commonly used in money laundering and illegal activities. FinCEN. This is Financial Crimes Enforcement Network, a U.S. Treasury Department agency created to impose regulations on Bitcoin exchanges. Fork. When one set of miners starts hashing a different set of transaction blocks, it is known as a fork. This can be a malicious tactic or undertaken accidentally. It can even be a deliberate ploy where the Bitcoin development team introduces a new version of the client. A fork is considered successful if it goes on to become the longer version of the chain. There are two Bitcoin forks currently, Bitcoin Cash and Bitcoin Satoshi Vision, although neither of those have become the longer version of the chain, and the main Bitcoin chain is still the most reliable. FPGA, a field programmable gate array, is another form of processing chip that can be tailored to Bitcoin mining. As these are sold in large numbers off the shelf and even reconfigured after sale, they are usually far cheaper to buy than ASIC chips, although they are less effective. Freycoin, another type of cryptocurrency created by Silvio Gesell and founded on the principle of being inflation-free. The Genesis block, the original block of any chain. Gigahash is the second. This is a measurement that determines how quickly your machine can mine. It is the number of hashtag attempts possible per second, measured in a billion hashes, a gigahash. GPU, this is a graphical processing unit, as found in your standard PC graphics card, as a GPU is designed specifically to render polygons in pixel-heavy computer games. They are also perfect for the calculations required in cryptocurrency mining. Hash. A hash is the mathematical process required in Bitcoin mining. It is complex to protect the sanctity of the currency and hard to decipher and alter the output. Hash rate, the number of hash calculations that can be performed per second. This generally dictates how successful a miner is likely to be. Inflation, the opposite of deflation. As the value of money drops, the price of goods and services increases exponentially. This gives consumers less purchasing power, so there's more motivation to spend a currency quicker. Input, this is where a Bitcoin transaction starts and will be denoted by a Bitcoin address. That is, unless it is generated transaction of a newly mined Bitcoin. Kilohash. The number of hashes calculated per second in thousands of hashes is a kilohash. KYC. This is Know Your Client, a regulation that forces financial institutions to thoroughly vet the people they do business with to ensure they are legit. Leverage. Utilizing leverage in foreign currency trading enables you to multiply your real funds and achieve significant profit. Leverage can be used by a trader to essentially lend another person's funds, which they can then earn back in commission. Liberty Reserve, a former giant of digital currency processing world, Liberty Reserve was shut down by the U.S. government after it was found to be money laundering. Litecoin, a type of altcoin that uses the script hashing function. Liquidity. Liquidity ensures that the price of a good stays similar amongst all trades, ensuring that it is easy to buy and sell. If there's a decent-sized community of traders, then the price will remain stable and liquid. An illiquid market results in extreme price fluctuations and makes it harder to value a good. Margin call. A margin call will take place when an exchange believes a trader does not have sufficient funds to cover their leveraged trades. Megahashes. The number of hashes possible per second measured in the millions of hashes is a megahash. A market order. A market order can be placed at an exchange when you want to buy or sell bitcoins instantly and at the going market rate. MBTC. A minuscule amount, 1,000th of a bitcoin. A microtransaction. Paying a minute amount as part of a transaction online. These are hard to carry out under conventional payment systems. Imagine paying for a bag of crisps with your credit card. Mining. Mining can be undertaken by anyone wanting to generate some new bitcoins for their wallet. You must solve cryptographic equations using the relevant algorithm. Mixing service. The art of mixing in your bitcoins with another person's and then sending you back the same amount but with different inputs and outputs. This is a measure that helps protect the privacy of your account, as your currency cannot be traced back to you. Mt. Gox. This was perhaps the original Bitcoin exchange back in 2010, and was certainly the most popular at the time. Based in Japan, Mt. Gox was subsequently gone into administration and closed. Namecoin. Namecoin is a unique altcoin that provides an alternative standard domain name system. Users can utilize .bit domains, only accessible via proxy servers, by paying with Namecoin. A node. Each computer that is connected to the Bitcoin network and relays transactions to others is considered a node. A nonce. A nonce is a random set of data used as an input when hashing a block. The nonce is the part that tries to fit the numerical parameters enforced by the difficulty of Bitcoin. A different nonce is used for each attempt at hashing. An orphan block. A block that was part of a fork that has since been discarded is known as an orphan block. This is not part of a valid chain. OTC exchange, a trader-to-trader exchange that doesn't employ the service of a central mediator. Output. The output is the destination address of a Bitcoin transaction. There can often be more than one output for each transaction. P2P means peer-to-peer. Interactions happen between two or more users in a network. A paper wallet. This is a physical recognition of your public Bitcoin addresses and their private keys. Your wallet can literally be a sheet of paper and presents a safer way to store Bitcoins that cannot be hacked or corrupted. A pool. The collective name for a group of miners. These users will work together to mine a block and then share the reward out accordingly. Mining pools increase your chances of successfully completing a block. If you're just mining alone, the chances of you completing a Bitcoin block currently are very, very low because there's so much processing power on the network. So a lot of times you'll want to pool together your resources with a group of people so each of you have a higher chance of mining a coin. PP coin, sometimes known as peer coin or peer-to-peer coin. This is an altcoin that uses a proof-of-stake calculation alongside proof-of-work. Pre-mining. A pre-mine is an operation carried out by a cryptocurrency founder prior to it going live. Prime coin. Prime coin uses a proof-of-work calculation to calculate prime numbers and was founded by Sonny King. Private key. The private key is crucial to keeping your Bitcoin safe. This is unique to you, and only you should ever know your private key. It takes the form of a string that signs a digital communication once hashed with your public key. PSP, the payment service provider, offers processing services for merchants who accept Bitcoin as currency. A pump and dump. This is a naughty tactic that artificially bumps up the price of an asset that has been purchased cheaply, with the aim of selling it on a profit. The aggressive publicity causes others to buy it, which then of course forces up its value. Process node. Process nodes are present in nanometers, which are produced during the chip fabrication process. The smaller the node, the more effective it is. Proof of stake. A proof of stake is an alternative to the proof of work method and calculates the amount of currency you can mine based on the existing stake you have in it. Proof of work. This calculation links mining ability to computer power. It takes a good amount of time and effort to hash a block successfully, and this is seen as proof of work. Public key. A public key is a Bitcoin address, the information of which is accessible to all. When hashed with a private key, it secures a digital communication. A QR code. A QR code is a 2D graphic that contains a sequence of data. These codes can be scanned by mobile phones and are used to encode Bitcoin addresses and to facilitate physical Bitcoin exchanges. Ripple. Ripple is a payment network on which users can transfer any currency. Payments are on an IOU basis and based on trust. The network is made up of nodes and gateways operated by an official authority. Satoshi. Satoshi, which is the name of the creator of Bitcoin, is also the smallest denotation available, at 0.0000001 Bitcoin. Satoshi Nakamoto. Satoshi was the original creator of the Bitcoin protocol back in 2008. He left the project in 2010. Scam coins. Scam coins uses pump and dump and pre-mine together in order to make money for the creator. A scam coin is an altcoin developed purely for profit-making potential. A script. A proof-of-work system designed for altcoin miners, and one that is slightly less complex and more forgiving than SHA-256, hence why altcoins utilizing script are more widely mined by those with CPU and GPU setups. Signature. When a private and public key are hashed together, they create a digital signature, which proves which address a Bitcoin transaction came from. Silk Road. The Silk Road was an online marketplace that generally traded cryptocurrencies for illicit purchases. It was closed down in 2013 after its owner, Ross Ulbricht, was arrested. SEPA. This is a single European payment area, which is an EU-led agreement to make transferring funds between member states easier and thus make Bitcoin exchanges go a bit smoother. SHA-256, the standard cryptographic equation used in the proof-of-work system of mining Bitcoin. SPV, the simplified payment verification enables users to verify their transactions without the need to download and significantly sized full blockchain. Instead, users simply download the block headers. A stale. Once a Bitcoin block has been hashed, it becomes stale, and therefore can't be hashed again. This name is also given to a hashing job in a mining pool that has already been finished. Taint. When a particular Bitcoin is held by two closely related addresses, it is the taint analysis that determines the steps it took. This also identifies addresses known for trading stolen coins. Terahash is the second. The number of hashes possible per second measured in a trillion hashes is a terahash. Testnet. This is a blockchain used solely for testing. Tor. Bitcoin traders and miners who want to conceal their identity often use this anonymous routing protocol. Transaction block. The transaction block is a record of transactions which are then collated and hashed and then added to the blockchain. Transaction fee. Some Bitcoin transactions will have a small fees imposed on them when sent across the network. This fee is awarded to the miner who has successfully hashed the block to make the transaction a possibility. UBTC. Another small denotation of Bitcoin, a UBTC is a micro Bitcoin, 0.000001 BTC. Vanity addresses. A vanity address is a Bitcoin answer to a personalized number plate. The screen will have a desired pattern, such as a recognizable name. A virgin Bitcoin. These are Bitcoins offered as a reward to miners that have yet to be spent. Volatility. The fluctuations in price of an asset such as Bitcoin are described as its volatility. Wallet. In much the same way you might store cash in your wallet, so to do Bitcoin owners in either an online or a paper wallet. The wallet holds the keys to each Bitcoin, keeping them safe and free from fraudulent activity. Wire transfer. A wire transfer is a preferred method of sending and or receiving currency from a Bitcoin exchange. This transfer is conducted electronically and can be secured to a bank account pretty much anywhere on the globe. ZeroCoin, an anonymous protocol designed to keep the identities of cryptocurrency exchangers secret. A zero confirmation transaction, where a merchant agrees to sell a product or service in return for a Bitcoin payment, yet the transaction cannot yet be confirmed by a miner or added to the chain. This is where double spending can become a problem. So that is just some of the basic terms and definitions you might see when you're looking into Bitcoin, cryptocurrency, and other blockchains. I hope they kind of give you more of a basic understanding of some of the terms. So if you see them, you might know what you're reading about now. Hope everyone has a great rest of your day.